Tax questions? Disclosure. This is not legal, financial, or tax advice. Seek counsel from a competent attorney for specifics. Link in the description. The tax system of Colombia is a complex and multi-layered system that is designed to generate revenue for the government while also promoting economic growth and development. The system is governed by several key laws and regulations, including the Colombian Tax Code, the Value Added Tax (VAT) Act, the Income Tax Act, and the Customs Code. One of the most important components of the Colombian tax system is the Value Added Tax (VAT), which is a consumption tax that is levied on the value added to goods and services as they move through the production and distribution process. The VAT rate in Colombia is 19%, and it applies to a wide range of goods and services, including food, clothing, and transportation. Businesses that are registered as VAT taxpayers are required to collect the tax from their customers and pay it to the government. Another key component of the Colombian tax system is the Income Tax Act, which is designed to tax the income of individuals and companies. The income tax rate in Colombia varies based on the level of income, with higher rates applied to higher levels of income. For individuals, the tax rate ranges from 0% to 33%, while for companies, the tax rate is 25%. The income tax system in Colombia is also progressive, which means that those who earn more pay a higher percentage of their income in taxes. In addition to the VAT and income tax, the Colombian tax system also includes several other types of taxes, including taxes on inheritance and gifts, taxes on capital gains, taxes on foreign investment, and taxes on luxury goods. These taxes are designed to generate revenue for the government and to promote economic growth and development by encouraging investment in certain areas. The Colombian tax system also includes several tax incentives and exemptions designed to encourage investment in certain industries and regions. For example, there are tax incentives for companies that invest in research and development, for companies that invest in certain regions of the country, and for companies that invest in the production of environmentally friendly products. One of the key challenges facing the Colombian tax system is tax evasion, which is the practice of not paying taxes that are owed to the government. Tax evasion is a major problem in Colombia, and it has a significant impact on the government's ability to generate revenue and provide essential services to the population. To address this issue, the government has implemented several measures, including increased enforcement efforts, the creation of a tax administration that is more efficient and effective, and the development of a system of tax information exchange between countries. In conclusion, the tax system of Colombia is a complex and multi-layered system that is designed to generate revenue for the government while also promoting economic growth and development. Boots on the ground. My personal experience with the Colombian tax system amounts to buying everyday goods and services, property tax, and income tax from a rental property. The 19% VAT tax, what they call here IVA tax, is rolled into everything that you normally buy on any given day. So, you don't even notice it. The property taxes I pay on my house are incredibly low. I pay approximately $500 a year for property taxes. The home where I lived in Washington State before we moved to Colombia, the property taxes were $382 per month. That will give you some kind of idea. My Social Security pension, my police pension, and various investment income I receive in small amounts, is not taxed by Colombia. The IRS gets their pound of flesh and Colombia gets none. So the only income we are taxed is the rental income from our first home we purchased here. Now where this all goes south, is when you sell a property. This is where the taxman really puts it to you. I will make a separate video solely on this topic, with more detail. But in a nutshell, you will be taxed 19%, which is the IVA tax, as well as some or all of essentially the income if you made money on the sale. This is what we would call capital gains tax in the US, and it is heinous. They will also nick you hard on inheritance tax. So a property trust where you can just assign your beneficial interest to your heirs, would put you way ahead of the game. Personally, I don't sell a performing asset to put it into a different asset class unless the upside is really good. And taking a bath on a home sale courtesy of the taxman is a good example. So to make it simple for the majority of people who are considering moving to Colombia as a retiree or digital nomad, it's pretty simple. I wouldn't worry about your Social Security being taxed. The same goes for people earning their money on their computer, which is such a great advantage in keeping a grip on your hard-earned money. Even in feudal times when serfs were required to pay 10% to the king, and 10% to the church, doesn't touch the robber barons of the tax authorities around the world that we have today. I hope you've enjoyed this video. Please like and subscribe. More coming, see you soon.